Can you tell me the format of the manufacturing account?
Oh yeah. So first, you start with the direct material consumed, which will consist of opening inventory of raw materials, purchases, carriage and goods, um, closing inventory, which will give you your direct material consumed.
Then
Then with that you'll add your direct labor and your direct expenses
in direct
to get
expenses, we have two things. What are the two things that is there in the direct expenses?
royalty and hire of special plant. Then
Okay.
you will that will give you your prime cost. Then to your prime cost you'll add all your factory overheads, which will give you your factory manufacturing cost. Then
Okay.
from that you will add your opening work in progress inventory and subtract your closing work in progress inventory to give you your cost of finished goods. Then
So what? It is also
uh, it's also called um,
P
production cost.
PCCG, production cost of your completed goods.
Yeah, production cost of completed goods. Then to that you will add the cost plus percentage that will be given in the question. So which will give you your, so basically you'll add the factory profit percentage to the cost, which will give you your a transfer value to the income statement.
Can you tell me what does a transfer value denote?
Um, the cost that you have, basically you were undergone with the, like, by adding the profit to it.
No. What does a transfer price denote? What does this mean? Suppose if your
Mm,
PCCG is 100,000, okay,
yeah.
and I would say your transfer price is 150,000. What does this 150,000 actually denote? Or I would say the factory profit is 50,000. So
Yes.
PCCG plus factory profit or manufacturing profit will give you a transfer price. So what does
Hmm.
this transfer price denote?
Your cost, no,
This is your
on
cost.
goods.
This is your manufacturing cost.
Your sales value, like the value you'll sell it at.
No, the value at which you sell
Or
is for the revenue.
no, but you will include this amount because, like, you'll add your like cost to a factory car. To that you'll add your
So
profit
what
in
is this
order to.
transfer profit? What is telling you that you have made a profit of 50,000?
Mm,
This is the price at which you can buy these same goods from the market.
oh yeah, okay, fine.
And
Yeah, so
the
if you're
price tell me.
hmm. So the transfer value is the market price basically. So if you're finding it cheaper to produce on your own, manufacture on your own, so you're just adding your profit to your cost and you're getting a transfer value,
So this is the
right?
value at which you will transfer your finished goods to where?
To the income statement.
Why do you transfer your finished goods to the income statement at a transfer value?
Mm, because you,
Because you are
uh,
making two different types of profit. One profit you make solely because of manufacturing. That is called the
yeah,
manufacturing profit. You add the
okay,
manufacturing profit to your PCCG so that you get a price at which these same goods are found in the market. This is
yeah,
the price
okay.
at which these same goods are available in the market. Then you
Hmm,
compare this price with the selling price so that you get your gross profit on trading.
okay,
That means when
fine.
you're doing the trading, you're going to compare this price with the revenue. So you have two
Okay,
different types of profit in a manufacturing concern. One is the factory profit, one is the gross profit on trading.
gross profit.
When you add
Yes,
both of these profits, what do you get?
total gross profit.
Total gross profit. So now tell me the format of the income statement.
Yeah, okay. So first revenue will come. You will less your cost of sales, which will be opening inventory of finished goods, plus your purchases
Of
um of purchases of finish, nay, of No, purchases won't come. I don't think so. No.
Opening inventory of
Wait.
finished goods. If there is any purchases, it should be of the finished goods.
Finished good only, yeah. And you'll add your transfer value to the income statement. So yeah, that, and then you'll subtract your closing inventory of finished goods.
Okay. So all the finished goods that is over here in your income statement is at what value?
Oh yeah, is that wait, uh, transfer value?
So all the finished goods is always at the transfer value. Factory profit is included in the opening inventory of
And
finished goods. It is included in the closing inventory of finished goods, and it is also included in the transfer value.
okay, and if they say that it's at cost, so you'll
Then you
make
will
it into
find,
transfer value.
you will find the
Yeah.
transfer. So can you
So
again?
if it's 15, if it's 15%, so you will just do 15 upon 115.
That depends at
into
15% is markup or margin.
Okay, fine.
Okay, so you will always have this formula PCCG plus FP or MP will give you TP, transfer price. So
Yeah.
if it is 15% of
Hmm.
the transfer value, then it will be this.
Yeah.
Okay, if it is
Yeah.
15% of the cost, then this will be 115,115.
Yeah,
Okay.
yeah, figure.
All your finished
Yes.
goods always should go to your income statement at what value?
Transfer value.
Or transfer value. Can you give the format of the income statement, please, again?
Revenue less your cost of sales, which is opening inventory of finished goods plus purchases of finished goods, plus the transfer value to the income statement, subtract the closing inventory of finished goods, which will give you your gross profit on trading. Then you'll add the factory profit from the manufacturing account to the income statement again. So that will give you your like just adding both the gross profits will give you your total gross profit. And if there are any expenses, then you subtract them and get your profit for the year. Here there's a you're on mute.
Your income statement has your revenue minus the cost of sales. You get gross profit on trading. Then you will add the gross profit on manufacturing. You will get the total gross profit. Can you
Yes.
tell me, when I say that I have made a gross profit on manufacturing this much, have you earned the total gross profit, or there is some gross profit that you have not earned?
You have.
Factory profit that you have not earned. Do you earn this entire factory profit, or there is some part of factory profit which is not earned?
No, you own the entire thing.
So even if you don't sell the closing, and even if you have closing inventory, you have some stock that is unsold, you still earn the
Yeah.
entire factory profit?
No.
No. So whatever is your factory profit that is included in the closing inventory,
Yeah.
subtract from here. That is called the pupa. What is it called?
Oh,
Pupa.
you.
The provision for unrealized profit.
Nice profit.
Okay, if the old minus new is negative, you will
It's a loss.
subtract. If
Yeah.
it is positive, you will add
Add.
to the gross profit. There is unrealized profit that is included in the closing inventory that you will
Closing
subtract.
inventory. Subtract. Yeah.
Okay, what is pupa?
The factory profit included in the
Okay.
closing inventory.
So when you're going to make your pupa account, the balance begin down over here. What does that represent?
The factory profit included in the inventory.
Which inventory?
Opening.
Okay, if you have balance closed down over here, what does this represent?
Closing inventory. Pupa
Then
and
you do
closing.
old minus new. If the answer is Positive means
Positive, then
what?
you'll add.
It's a gain, and if it is negative, you will subtract. Are you with
Subtract.
me?
Yeah. Hmm.
Yeah. Now let's go ahead.
Okay.
Yeah, tell me.
Yeah, so the question says, why finished goods inventory is not shown at transfer price in the statement of financial position?
Okay, so finished goods inventory, why it is not shown at transfer price
Yeah, in the
in the
SOF.
statement of financial position? Tell me any inventory that you value, according to IAS 2. It has to be
Hmm.
valued at what price?
Lower of cost or NRV.
So, according to IAS 2, your inventory should be valued at cost or NRV, whichever is lower.
Yes.
Am I correct?
Yes.
Okay. So, the finished goods inventory, one is the cost, that is your PCCG, and your NRV will be the price at which it is available in the market,
Hmm. Yes.
which includes the factory profit.
Yeah.
Okay. So, which value you should value it at?
Hmm. PCCG, no, because it's
HCCG.
lower.
So this is the whole reason why you value inventory at, because you have not yet earned the factory profit in that closing inventory.
Hmm.
The profit that you have added it,
Ah.
you've not yet earned it. So IS2 tells you that you will record your inventory at lower of cost or
Miss,
NRV.
but then why is it then an income statement? It's a transfer value.
We transfer it into income statement at transfer value because we want to know income statement is made to find out the gross profit because of trading. So when you have
Okay.
manufactured that good, you have made one profit that was because of manufacturing.
Hmm. Yeah.
Okay, so you separate your profit into two parts. One profit is because of manufacturing and one profit is because of trading. Trading means what? Buying and selling.
Yeah. Hmm.
It is not manufacturing and selling. Trading is buying and selling. So the goods that you have manufactured, if the same
Mm-hmm.
goods you buy it from the market, you will get it at the transfer price.
Yeah. Okay.
That you will compare with the selling price, so you get your gross profit on trading.
Okay.
You exactly know that you are making a profit because of trading.
Hmm. Fine.
Okay, and manufacturing, you know properly that your manufacturing department is doing a good job and you're earning a profit because of manufacturing.
Hmm.
But your total gross profit will be the addition of two. Total gross
Hmm.
profit will be the addition of two profits. What are those two profits?
Gross profit on trading and
Gross
factory
profit on trading and gross profit on manufacturing or the factory
profit.
profit. Okay,
Hmm.
the factory profit. But this
Yeah.
factory profit is not realized in full.
Hmm.
Why?
It's not realized that
In full.
in
Do
full.
you earn the entire factory profit?
No, it's some of it is no, matlab the goods that are not sold, which is the closing inventory. In that, they still like that value still contains the profit,
So
factory
from
profit. So you
that
have
you are
to
going to
subtract.
minus the unrealized
Hmm.
profit.
Yeah, and
Unrealized profit included where?
sorry,
Unrealized profit is included where?
in the closing and in the inventory opening and closing both,
The
right? Or
closing
no?
inventory. See.
Okay, but the first day, matlab when you're making the pupa account, that time.
Profit is included in both opening, closing, and transfer value. But you have not realized only the profit that is included in the closing inventory.
Closing. Fine. All
Okay?
right.
You
Yeah.
also know how to make the pupa account, right?
Yeah. Miss.
Can
For
you explain the term indirect
yeah,
manufacturing cost?
indirect manufacturing cost. Costs that are not involved, um, that are not directly involved, in the manufacturing process or production process of goods.
Okay, very good.
Okay.
Tell me, creating provision for unrealized profit. Which accounting concept are we following?
Uh, Miss, can you repeat?
When I am creating the provision of unrealized profit, which accounting
Hmm.
concept am I following?
Okay, so you are following firstly so prudence concept because you're valuing your inventory at a lower of cost or NRV and not at the
I said when
transfer
you are
value.
creating pupa. When you're creating pupa, which accounting concept are you
Oh,
following?
when you're yeah, miss that only na prudence
And
and matching.
realization also.
Um, yeah, but I don't remember realization.
Explain with the support of accounting concepts the treatment of unrealized profit that is included in the finished goods. Unrealized profit. Unrealized profit, what is the treatment of unrealized profit in the income statement? And what is the treatment of unrealized profit in the statement of financial position?
Um, yeah. Um, okay, yeah, so prudence concept.
Now, first tell me what is the treatment of this unrealized profit that is included in the
Yeah,
closing inventory? What is the
okay.
treatment of
So,
it in the income statement and what is the treatment of this in the statement of financial position?
okay. So in the income statement, the unrealized profit is subtracted from the from the closing inventory, a transfer value.
It is subtracted from the closing inventory in the
Sorry,
income statement.
sorry. That's for a statement of financial position. For income statement, after you add the factory profit, you subtract pupa, increase or decrease in pupa from the
Okay.
gross profit.
So it is deducted from the transfer value of the finished goods inventory. So
Yeah,
unrealized
in
profit is reduced from the closing inventory.
Miss, no, it's just deducted from the gross profit, no?
And
Total
it is
gross
also
profit.
deducted from the gross profit, increase or decrease.
If it's decreased, then you will add,
If it is decrease, then you will add, and if it is increase, then you will do
subtract.
minus. Minus.
Yeah,
And also it is removed from the closing inventory
in the SOFP. Yeah.
in the SOFP. So when I am
Mm.
doing this,
Yeah.
which accounting concept am I following?
You're following prudence concept because your profits and assets are not overstated,
Hmm.
and you're following the realization concept because you're not recording profit until you've earned it.
Until
Yeah,
these have been
profit
sold to the
sold
customers.
to the customers. My carriage inwards.
Can you tell me my carriage on raw material is recorded in the financial statements?
Uh, because it's the cost
Where? Listen to the
from.
question. Where is carriage
Oh,
inward?
where? Okay, my bad. Yeah,
Where
in
is
the
carriage on
manufacturing
raw
account.
material recorded in the financial
Yeah,
statements?
in the manufacturing account is recorded under the cost of in the direct material consumed. You add it to the purchases of raw materials, and
Okay,
it's an
fine.
yeah additional cost.
Now another question is explain two reasons why factory profit is added in an income statement.
Why factory profit is added? Okay. Firstly, it completes the double entry system. So factory profit is debited in the manufacturing account, so you will credit it in the income statement.
Can you explain me
And
the
you're
meaning of this?
mm, but you're adding it both now in the manufacturing and in the income statement. So how are you debiting and crediting it?
Factory profit is increasing your profit.
Yeah.
Okay, it is increasing your profit and it is also increasing your cost.
Yes.
Okay, it is added to the PCCG.
Yeah.
That means it is increasing the price of the goods.
Yeah.
That means price of the goods is an expense for you.
Yeah. Okay. Fine.
This is a debit.
And in the income statement, you're adding it to the gross profit
It is
to get
increasing
total
the profits, and profits have the credit balance.
credit.
It is
So
a
yeah,
credit.
got it.
So,
All right.
first reason why factory profit is added in the income statement.
It completes the double entry system as the factory profit is debited in the manufacturing account and credited in the income statement.
Okay, 1 minute. Okay. So the first thing is that the factory profit, it completes the double entry. Can you please tell me that part again?
Yeah, it completes the double entry as the factory profit is debit. As the factory profit is debited in the manufacturing account because it adds up to the price of the goods, and it's credited in the income statement because it adds up to the gross profit.
Okay, another reason why it is added to the income statement.
It enables the income statement to show the profit of the whole business from both manufacturing and trading.
Okay, so it will enable the income statement so that my income statement can clearly show me the profit of both the sections together, factory section also and the trading section also.
Hmm.
Okay, the directors have suggested that the company should stop accounting for factory profit. One of the director is suggesting that stop the accounting for factory profit. Okay, advise the
Hmm.
directors whether or not they should stop accounting factory profit or no. Justify your answer.
Hmm. Okay. Uh, so
They are telling you account for the factory profit, then you add it to your total gross profit, then you remove
hmm.
the unrealized profit. It is a very time consuming process. So don't do
Yeah.
this and stop accounting for factory profit. So you have to advise your director whether it is good to stop accounting for factory profit or not.
Hmm.
Tell me.
So they should not stop because
Why?
transfer price will help them compare the cost of buying from an outside supplier. So it can be possible that like basically they are manufacturing at a lower cost than the market price outside. So that will help them to reduce cost.
How will that help them to reduce costs?
Because miss, they know
They are
that
telling
they
whether they should stop accounting for factory profit or not. Whether they should stop accounting for factory profit or not. What is the benefit if you are accounting for the factory profit?
mm, factory profit. You'll just, I don't know, your price of goods increases. Price of goods manufactured increases. So
You are accounting
you
for factory profit. Do you know that your manufacturing department has done some good job?
no
Why no? If you manufacture at 100,000, you're getting the same goods at 150,000. Your factory profit is how much?
50,000.
Your factory profit is 50,000. So you know that your manufacturing department is doing a
Oh
good
yeah, yeah,
job.
yeah, yes.
So you can, at one glimpse, you can see the manufacturing account and you can tell that the department is performing.
Go, yeah, efficient and productive. Yes.
Yes.
Yeah.
Okay. Another thing is that when you transfer the goods at a transfer value, you will come to know separately the profit that you're earning because of trading.
Yes. Yeah.
Yes. And
Yeah.
based
So you
on that
get to
trading profit, you can give bonus to your employees
you
if you
can
want to give to.
so you can differentiate between your profit from manufacturing and from your trading.
Okay, it will also help you to set your selling price.
Mm, yeah. Okay.
You can,
Fair enough.
you will not be comparing this with your markup or margin to set up selling
Yeah.
price. If you're setting up the selling price, you will see that
Cost plus.
outside cost is this much, so you will set up a selling price on this amount.
Yeah.
Set up a selling price on this amount and not on the other
On
amount.
on transfer value.
Yeah, on the transfer value.
Okay.
So it helps you to set the selling price also.
Yep.
But setting the factory profit may be some subjective. You cannot have a fixed percentage of factory profit because it is not necessary that always you are manufacturing at the same cost.
Hmm.
But the
Yeah.
plus point is more, negative point is less.
Yes.
Advise whether they should stop accounting for factory profits or no.
So yeah, you should not stop accounting for it
Why?
because it helps you in the overall business. Like you can know if your business is efficient. It can help you to compare
It will help
prices
you
with
to
the
know whether
external.
your business is efficient or no.
No, as in sorry, if your manufacturing department is efficient.
Okay. Can you give better words for it?
Um, Productive or else. If your not manager, sorry.
It helps you to
Um,
assess the performance of your
yeah,
manufacturing department.
yes.
Okay. Factory profit
Yeah.
is not going to change the overall profit, but it will help us to know separately the profit from trading and profit from manufacturing.
Yeah.
You can compare your manufacturing cost with the price of buying it from an external supplier.
Um,
It helps you in setting the selling price.
yeah,
So
but
you
transfer,
stop accounting.
Miss, I don't understand the first point.
Using a transfer price may compare with the cost of buying from an external supplier. So when you are using the transfer price, you know that your PCCG is this much. You can compare your PCCG with the cost of buying from an outside supplier. Then only you get the transfer price. Then only you can get the factory profit, right?
Yeah.
So when you're using a transfer price, you're actually doing what? You're comparing your cost of manufacturing with the cost of buying from an external supplier.
Okay.
Okay? Done?
Yeah.
Can you explain me the meaning of the term work in progress?
Work in progress are basically goods that are not that are half completed, are still or are still no or still need to be completed, or manufactured. Yeah. What
Okay,
else?
accounting concept. This question comes again and again. Accounting concept that you follow when you treat the unrealized profit on finished goods in both income
Hmm.
statement and statement of financial position. Can you please tell that again?
Yeah, so prudence concept as profits and assets are not overstated, because you subtract the unrealized profit from the closing inventory. Second would be realization as profits are unrealized until goods are sent to customers. Then matching concept as the income for the year is matched against the expense for the year.
Okay, fine. Explain why prime cost varies when production level varies.
Mm, yeah, I mean, if the production level increases, if you're producing more output than you
First,
were
you will
before,
tell what is
you
prime
will.
costs.
Okay, prime cost consists of the addition of direct material, direct labor, direct expenses, gives you prime cost,
What
and
does this
as
mean?
the
This is the cost that is
directly related to the manufacturing, to the product, to the
directly related to the production. It can be traceable to the
production,
product.
yeah.
So when
And uh,
hmm,
if the production increases, then certainly the business would have to purchase more raw materials, which will increase the prime cost. So therefore, prime cost increases as production level
varies
increases,
with
and
production. Yeah.
sorry, varies with production levels.
Only 2 marks.
Yeah,
Let's
yeah, yeah.
put your answer.
All right.
Question. Read.
Discuss the factors the directors should consider in deciding whether to increase the inventory of raw materials. Okay. So, okay. So if they are finding
Read the above information also, please.
yeah, okay. The directors have been increasing the inventory of raw materials because of the fears that the price of raw materials will increase considerably in the future. Okay. So one reason would be that if they purchase a lot of raw materials, they will need. Okay, first I'll say the yes side or the no side. Um. Okay, I'll say the yes side
Directors
first.
have been increasing. They're increasing the stock of raw material because they
Yeah, that will.
sure the prices of raw material will rise.
Figured. Okay, so first the storage cost will increase because accumulating so many raw materials at once, that will increase your storage cost, therefore reducing your profit. Then uh, uh, um
Faster.
yeah uh it could be that the prices will not increase in the future. So because of that, it could be that the prices could fall in the future. So again,
Yeah,
your cost would.
yeah. Okay.
Yeah, so the prediction could be wrong. So the prices may therefore decrease in the future. So they would bear a lot of cost in the long run. Yeah, they'll have to bear. Then mm,